Hello there, welcome back to my Maverick channel, and here we talk about everything crypto, everything digital. We talk about the trends in the cryptocurrency space, and today we're going to talk about a topic which I think is extremely important, which is portfolio diversification. So if you've been in this cryptocurrency space, we have these assets called digital goods. So how do you allocate or reallocate your investment within this space or your engagement in this space to diversify what you're looking at? So if you're interested in this kind of information, then stick around for the whole video. So when you go to the crypto space, just like in the traditional sector, there's a lot of talk about portfolio diversification. So you can diversify into real estate, you can buy bonds, you can buy stock in different companies, you can buy different types of stocks, penny stocks, you can buy fractionalized stocks, you can buy art, you can buy fractionalized art. There's so many ways to diversify your portfolio, or you can be a VC investor. You can invest your money in different startup companies, already existing companies, or dying companies. There's so many ways to reallocate your money, but you have to do that with a financial advisor, because these people, they know which accounts to open for you. A Roth IRA, depending on what level you're at in your life, whether you're retiring. So there's different ways to diversify your portfolio so that it works for you. So in the crypto space, similarly, this space has evolved in such a way that it's actually vital to diversify your portfolio. But what I have to say is that, of course, when you go out there, there's so many awesome articles, and I'm going to use some of these to I'm not going to read the whole things, but I'm going to use the articles to explain some of the things that they're trying to drive at. But when it comes to portfolio diversification, it's not something you wake up to just decide upon, but rather it comes as a result of the amount of research you're doing in the crypto space. And as you do this research, you learn the products that fit your narrative, you learn to see where the future is going in terms of different products, and then you reallocate into those products depending on the team, depending on your interest. It's not something you do because people are doing it or telling you to do it, but you do it depending on your own conviction. So for example, this is an article written by Binance. I'm going to just quickly skim through this one because they write a lot of important information about the traditional financial diversification and how that applies to crypto, and it's a brief short article. There's so many other articles you can find there, and then there's this one as well. These are the points sort of summarized that I'm going to hint on, and then there was this also other summarized article about this, but this is generally important if you're interested in this kind of thing. So how to build a well-balanced crypto portfolio. They kind of explain to you the importance of balancing your crypto portfolio. So balancing a crypto portfolio is not that different from balancing a traditional financial portfolio. You can easily reduce your overall risk according to your profile and investment strategy. All it takes is to get started is simply diversifying your investment among different portfolios, and they go through that, introducing and all that. But the point I wanted to make here today, what are asset allocation diversification? They kind of go into that. When creating an investment portfolio, you should be familiar with the concepts of asset allocation, diversification, and so on. So they're bringing that knowledge of the traditional sector and applying it to the crypto space. Concentrated versus diversified portfolios. Most advice will tell you that your crypto portfolio has to be diversified. Well, it says while this is standard for investor, there are pros and cons to do this, and that's what I was alluding to earlier. So you don't just jump into this, but rather you have to do your own research and make uninformed decisions. But here they go on to talk about different types of cryptocurrencies like Bitcoin and market capitalization. So when you multiply the price times the circulating supply, you get something called a market capitalization as one of the metrics you can look at when you're diversifying your crypto portfolio. They talk about other cryptocurrencies like Ripple, which goes into the payment sector. So this cryptocurrency diversifies into things like payment. Bitcoin is more like a store of value. Bitcoin Cash, I guess, scaling and also payments and creating other services. Ethereum, decentralized applications. So that goes into diversifying your portfolio depending on the use case of a particular cryptocurrency, depending on who you are. Are you a government? Are you an institution? Are you a small business? Are you a medium business? Are you a large business? What are you looking for? Are you looking to transfer money? Are you looking to pay your workers? So different cryptocurrencies will serve different purposes. Are you a developer looking to develop decentralized applications? Then we have things like stablecoins that you can diversify into. So you're converting your crypto assets, whether NFTs, whether tokens, you're converting them into stablecoins which mirror the 1-to-1 ratio of the US dollar or whatever fiat currency you're interested in. So you're protecting your value through that kind of diversification. diversification. These tokens like security tokens that might mirror the value of a company, or that might have characteristics similar to the way we know traditional securities and security stocks or security stocks. So in this case, security tokens might serve that kind of purpose if you're maybe a company looking to go public in the crypto space. So utility tokens, like for example here they're giving Ethereum and the Binance token, which you can use across DeFi and an expanse of activities in the cryptocurrency space. So you can diversify into a cryptocurrency because it fits that kind of narrative. There's also governance tokens. These tokens help you to vote on different proposals in different smart contracts, in different products that are built out there. Depending on what a company is doing in the crypto space, they might have a token that's specifically for utilities, or participating in the activities in that ecosystem or in that decentralized autonomous organization. And you can have tokens specifically for the purpose of voting on policies, and they fall under the category of governance tokens. So you might want to diversify your portfolio depending on those kinds of metrics. Then financial crypto products, they talk about things like Binance, which is an exchange. So, and the kinds of products you might want to look at there. How to build a well-balanced crypto portfolio. Here they give a few pointers, like splitting your portfolio between high and medium low risk investments. So you could look at that in terms of market capitalization, where things like Bitcoin and Ethereum that have a high market capitalization, there's a lower risk as far as their price drop is concerned. So you might diversify to kind of protect yourself, because some of these cryptos are established. Consider holding some stable coins, as we've talked about. Rebalance your portfolio according to your use case, according to what you need in that particular situation. The crypto market is very volatile, so you might want to protect yourself from that volatility by going into stable coins, or basically buying cryptocurrencies that you really believe in, or crypto product. Allocate new capital strategically to avoid overweighting any one area in your portfolio. So this further goes into diversification. And also there's things like dollar cost averaging in. When the prices are going up, you slowly buy in, or you slowly sell. When the prices are going down, you dollar cost average in, where you slowly buy into the cryptocurrencies. For example, if you have $1,000, you just don't buy $1,000 straight away. You can start off with $100, next time $200 and $500, and that's a very good strategy. Then also do your own research, which is a very important point. Of course, you can find more articles, and there's also basically the point we can summarize is hold your cryptocurrencies. You can diversify because of different cases. You can hold NFTs, which they haven't mentioned here, and these NFTs can serve many purposes. You can stake your cryptocurrency. I've talked about this in the past videos that I've done. Staking gives you rewards, and it also helps you secure in the network. So you can hold cryptocurrencies for staking. You can delegate your NFTs in play to earn model, where people use these NFTs and you earn money from that. You can lend and borrow in different DeFi exchanges, so you can use their native cryptocurrencies to participate in these kinds of incentives. Maybe you get better interest rates when you hold their cryptocurrencies and you're lending and borrowing on a particular exchange. So of course, the reasons we've looked at for diversifying is the markets can be very volatile. So you may want to buy stable coins, you may want to buy cryptocurrencies. For example, Bitcoin is a high market capitalization crypto, just like Ethereum, and this is a hierarchy here. Or you can even buy stable coins like USD Tether, or other coins like the Binance coin, and so on. That's part of portfolio diversification. So price jumps. When you diversify into other crypto, you might capture that value in another ecosystem, in another crypto, but you have to be really careful. Just because a coin is pumping, don't just FOMO in, don't just keep buying it, and vice versa. Don't just buy into other projects just because their prices are low or because everyone's talking about them. And you can try to rely, it's hard to rely on just a single cryptocurrency because the space is expansive. So you want to tap into different value afforded to you through investment into other cryptocurrencies. So it also enables you to make the most of multiple coins that are performing well. This also goes into things like multi-collateralization. So you can use a bunch of different cryptocurrencies. You have a basket of them, and you can use them to collateralize your different positions. Could be debt positions and other things as this space financially evolves. So you can also look at other articles here that are essentially going to expand onto the things we've been talking about, like through market capitalization, diversify your crypto portfolio. through a geographical location. For example, if you're in El Salvador or if you're in a country that supports cryptocurrencies, then your taxes might be lower. But countries like the US and Canada have very high taxes on cryptocurrencies. Countries like China have really stringent laws on cryptocurrencies. So you diversify your portfolio depending on things like that, and then invest in different industries, investing in NFTs and different cryptocurrencies. Like the Brave browser has their own token, which is the basic attention token. So in that way, you're investing in the technologies that they're building. Some cryptocurrencies might be attached to video games. You're directly investing in those products. Some might be attached to companies, to gold, to metals. So you're diversifying your portfolio because you have an interest in these different things, or like Ethereum, decentralized applications, non-fungible tokens like NFTs, like we've talked about. So the crypto you're diversifying into might have these activities or these types of products that you're interested in. Diversify due to market risk. Of course, we've gone into the price dumps, the price pumps, and all these kinds of things. They happen. So you want to diversify your portfolio to watch out for these kinds of things. And here they do a summary in this particular article. Buy cryptocurrencies with different use cases, invest in different cryptocurrencies, blockchains. So you can invest in proof of work, proof of stake, proof of authority, proof of other things that are being created out there, like Hedera Hashgraph, I think, uses another type of consensus algorithm. So you might be interested in that. For example, Ripple or XRP uses a different type of consensus algorithm, which enables it to do payments efficiently. Stellar, so like Stellar Lumens, another token as well. So diversify by market capitalization, diversify crypto projects by location, invest in different industries, branch out to different asset classes, and diversify due to risk level. Asset classes that goes into, of course, NFTs, different cryptocurrencies, different blockchains, different things that they're doing, that like the security tokens we looked at, and governance tokens, utility tokens. So the lingo can be a bit, there's a lot to look at, but that goes into diversify by risk level, so your risk tolerance, and also majorly, most importantly, it goes into doing your own research so that you develop that mindset to learn and make those educated decisions to know how to allocate your money. So before I end this video, I'll quickly talk about these last cryptocurrencies to give you an idea. Bitcoin is normally known for it has established itself as a store of value. Ethereum started the innovation of creating smart contracts and developing decentralized autonomous organizations. USD Tether started off on Bitcoin. It realized it cannot build on Bitcoin. Then it scaled up to different versions. It has an Ethereum version. It has a version on Polygon. It has a version on other blockchains like Binance and others, Solana, I think even Avalanche. So it's spreading out like that. So even other cryptocurrencies are diversifying in their use cases. The Binance token, or the BNB, is built using the Cosmos consensus algorithm, so therefore it can allow also, it's also Ethereum virtual machine compatible, which means you can do the same stuff here that you would do on Ethereum, you can do them here. And it also goes into exchange fees. When you have their tokens, you pay less fees when you use their services and the exchanges, and you can pay gas fees with it. So those are different use cases. The USD coin, I think, is also built on the Ethereum network, which is a stable coin. Solana is another cryptocurrency ecosystem itself, its own consensus algorithm, and it's building its own value, so you can diversify into Solana because of that. But this is not investment advice, guys. The XRP is focusing on financial services. Terra Luna is really investing a lot in decentralized stablecoins. Cardano wants to focus on smart contracts and building real world use cases of these projects. Terra is the stablecoin built by collateralizing Terra Luna token to build the stablecoin, which is a Terra USD. Binance USD from the Binance ecosystem. Dogecoin was built specifically to be a meme coin, but it was built really earlier on, so it has proved itself to be a robust cryptocurrency. Guys, this is not investment advice. Polkadot is into interoperability within the crypto space. Avalanche, smart contracts. Shiba Inu, meme coin of a meme coin. Wrap Bitcoin is a mirror of Bitcoin. Lido is an exchange token, I think, for Lido staked Ethereum. So these are different use cases. DAI, stablecoin for Ethereum, Neo Protocol. So what I'm alluding to, these are exchange tokens, Polygon scaling, Tron. So why I just went through some of these tokens that you're seeing here is I was trying to allude to the fact that these different cryptocurrencies have indeed different use cases, and if you're serious about diversification, then you want to look at their different use cases. If they fit your narrative, then you diversify into them. All right, guys, I hope you learned something from this video, and I'll see you on the next one. Take care. Bye bye.